Fun fact, since 2010, Bitcoin has died 416 times.
Whoa, what?
Okay, so it hasn't actually died, but that's the amount of times that mainstream media have declared the death of everyone's favourite cryptocurrency since its inception, as documented by a website called 99 Bitcoins, which has to be a reference to the Jay-Z song. Each red dot represents one of those times the media has declared the end of Bitcoin. So is Bitcoin dead? Should we all be selling it and running for the hills, or is now the time to be buying? Let's get into it.
People have to understand that this is a dice roll.
It was all going great, wasn't it?
You guys are getting paid?
In the 12 months from April 15th, 2020 to April 15th, 2021, Bitcoin's price rose from $6,998 to a staggering $62,716. It felt like every other day a new company was coming out saying they were getting involved in the digital asset, and the common belief was that Bitcoin was probably going to 100K by the end of the year.
Where is it going? It's probably going to 100, then 150, then 200,000.
People understood it was probably a bubble, but sentiment and momentum seemed to suggest that the bubble was far from popping. That is until Elon got involved.
Nice one, brother.
In the words of one of the greatest living philosophers of our time, no one man should have all that
Power.
but unfortunately, some do. This tweet from Elon Musk triggered a monumental sell-off of Bitcoin and the wider crypto space, leaving many investors who came late to the party nursing some really heavy losses. On the 31st of December 2020, when Bitcoin's price was around $28,000, I said this. If I had to take a guess right now at what I think is going to happen to Bitcoin over the next 12 months, and that's exactly what this is, a complete guess, I think that FOMO, or the fear of missing out, will take over, and over the next 12 months we will see the price of Bitcoin rise quite a lot. At which point, someone who has a lot of Bitcoin will cash out big, leading to a massive crash again, and then Bitcoin will settle out at a new lower price, which is higher than the previous low price. I'm not feeling smug. So let's dust off the crystal ball again and examine both sides of the argument and take another complete guess at the future of this new asset. I will of course tell you what I'm going to be doing going forwards, but as I'm not a financial advisor, you shouldn't take any of that seriously. But first of all, Elon's tweet backtracking on Bitcoin focused on its environmental impact. To keep it simple, when miners mine Bitcoin, what they are doing is solving complex mathematical equations. For solving those equations, they are rewarded in Bitcoin. As time goes on, it gets harder and harder to solve those equations, so the miners need bigger and bigger computers that use a lot more
Power.
Elon seemed to wake up one day and suddenly realised that a lot of the miners were reliant on
Power.
from fossil fuels such as coal. And when you're the anointed saviour of humanity on a quest to move us all to a barren dust bowl so we can drive around in our stylish electric cars digging holes and playing with our flamethrowers, dirty energy really isn't on brand. And Elon kind of has a point. According to the Cambridge Centre for Alternative Finance, yes, that is a thing, Bitcoin currently uses about 0.55% of the world's energy. This is about the same as the whole country of Sweden. But I question two things here. First of all, I highly doubt that Elon wasn't aware of the energy consumption of Bitcoin when going into the investment initially. Yes, the rise in price caused more miners to get involved, which increased energy consumption. But Elon,
Yes.
you're a smart guy whose main focus is on sustainability. How did you not realise that Bitcoin was thirsty? Jack Dorsey, another eccentric billionaire and crypto fan,
Hi, my name is Jack Dorsey.
who likes the noises birds make and two-dimensional shapes with four equal sides, stated that Bitcoin actually promotes the use of clean energy. And I think he has a point, much like a square. One of the biggest costs miners face besides supercomputers is
Power.
This is why a lot of crypto miners operate in China, because energy costs are cheap there and there's also banks of surplus energy in areas that would otherwise go to waste. But this doesn't get around the point that Bitcoin is thirsty. But I don't think this is a Bitcoin issue, I think this is a sustainable energy issue. We live in a world where we make 100 billion new items of clothing every single year for 90% of those items to end up in landfill within 12 months. That's enough to give everyone on the planet 14 new items of clothing every single year. If Bitcoin just disappeared tomorrow, this planet would still have a massive issue with overconsumption and waste when it comes to energy usage. But that isn't a reason to just ignore the Bitcoin problem. But innovation in green energy will come about because there is profit to be made from it. The argument could be made that the profitability of Bitcoin mining could accelerate the adoption of green energy usage.
Bitcoin mining could take off if there's excess energy from solar being loaded into power walls. It can be offloaded into Bitcoin mining, and the whole ecosystem therefore becomes much more economic. If this happens, we believe that the adoption of solar is going to accelerate dramatically.
So if energy concerns are weighing down the price of Bitcoin in the short term, what happens when we do make that move to greener energy sources? For long-term holders, the concerns about energy in the short term could be a potential buying opportunity. Personally, I just think the whole Elon thing comes down to something really simple. A lot of people bought it because Elon tweeted, and then a lot of people sold it when he tweeted. Simple as that.
Thank you very much.
The second argument that I've heard against Bitcoin recently is that it's become a victim of its own success, that basically it will become redundant and other coins will take its place. We can all agree that Bitcoin brought cryptocurrency to the masses, and without Bitcoin, we would not have Ethereum or any of the others. David Russell, VP of Market Intelligence at TradeStation Group, said, "Just as Yahoo and AOL put the internet on the map and then died, Bitcoin made crypto a mainstream business, but that doesn't mean it will remain the go-to asset." The argument is that other cryptos will do Bitcoin better than Bitcoin does. But this is something that investors face in the normal investing world anyway. How do we know which company will be the one that dominates? We don't. This is why most investors buy index funds. Investors combat this through diversification. And this is what I plan to do when it comes to my crypto holdings. I will spread my allocation into cryptos each month across a few different projects that I think have legs in the long run. I'll make a video separate to this at some point about all of the cryptos I invest in on a monthly basis and why. But in a nutshell, I'm diversifying across a few different projects so that I haven't just got one horse in the race. And if Bitcoin is replaced by another cryptocurrency, I have a few other, bets down. In order for me to buy a crypto, I need to know it ticks the following boxes. It is transparent, it has a definitive purpose, it's easily accessible, there is an efficient and reputable team behind it, and its network is trustworthy. Bitcoin might not be the dominant force in years to come, but as it stands, it is right now. And institutional appetite remains heavily focused on Bitcoin.
They want Bitcoin. They haven't gotten past that yet. Bitcoin is the property, the digital asset they want.
Coming back to the list of points I just described when looking at different cryptocurrencies, one of them will draw a lot of flack from Bitcoin haters, and that is the whole definitive purpose point. The use case for Bitcoin can be hard to argue. Is it a currency? Is it a store of value? Is it just a speculative-based bet on the greater fool theory and nothing more than a new age Ponzi scheme without a main benefactor at the top?
Tell these people something they don't know about me.
I think the answer to this is yes. Well, apart from the whole Ponzi scheme thing. What I mean by this is, I think there's a few use cases emerging with cryptocurrency, and we don't really know what the use cases will be in 10, 20 years. Just like we didn't know that when Amazon started out as a book company, that it would end up being everything it is today. With the whole Ponzi scheme thing, Ponzi schemes are characterised by a promise for high returns with little risk. The returns are often consistent with very little dips or retractions until eventually the price collapses. And they also have an unclear structure on how these returns are generated, and typically the whole thing is shrouded in secrecy. Bitcoin is characterised by wild price swings, literally no guarantees in terms of returns, and is probably one of the most transparent assets in the world. It is literally a public ledger. It's not a Ponzi scheme. Now that doesn't mean it's just a worthless bit of code. It very well could be. And in a few years' time, we could all be sat here going, well, that was a waste of time. Turns out Bitcoin was dead. But there are use cases emerging for Bitcoin. The most obvious one is as a payment system. Bitcoin provides a very unique ability to transfer value pretty much instantaneously to anyone in the world. Try transferring £1 billion to someone in North Korea through traditional finance systems. You're going to struggle. But I don't want to focus on this today, as besides transfer of value quickly, I think the idea of Bitcoin as a currency is a long way off. The price would need to stabilise, we would need to sort out the scalability issues, and we can't ignore the fact that central banks and governments would likely move against Bitcoin to protect their own domestic currencies. The Americans aren't just going to roll over and let Bitcoin take out the dollar.
This is business!
The use case I see as more plausible and apparent right now is the argument of businesses converting a small proportion of their balance sheet or their spare cash into crypto and putting it to work in order to generate yield or a rate of return. Kevin O'Leary discusses this at length in a few interviews, but it goes a little something like this. Let's say you're a business and you currently have a load of spare cash, either in the form of cold hard currency or you store it in something like gold. At the minute you have an issue that you need to address. Because of all of the stimulus that's occurred as a result of Rona, inflation concerns are making businesses feel that the money that they have on their balance sheet, that spare cash, is now a liability. It's losing value because of all of the extra money that's been pumped into the system. So you could move it into gold, but the problem with gold is, besides the hope it increases in value, it doesn't really do much, it just sits there.
And imagine if I could have, over these years, had a 5% yield on my gold. That would have been incredible. Well, I can on my crypto.
But within the crypto space, there has been an emergence of DeFi, or decentralized finance. This is a whole broad space, but within that, there is an appetite for certain individuals to borrow cryptocurrency and pay a rate of return on that, so they can do things like short it or trade it, whatever. I cover BlockFi here. That's who I use for this sort of activity. And basically they provide an interest rate on your crypto. For Bitcoin, that can be as high as 5 to 8% per year paid to you in Bitcoin. I cover the risks on there and please believe me, it isn't without risk. So this isn't a sure thing. Below in the description are a series of links on where I buy my cryptocurrency, and also BlockFi, where I send some of my cryptocurrency to generate interest on it. I've also outlined below step by step how I buy cryptocurrency to reduce the overall fees. I'll make a video on this at some point, but I essentially use Coinbase and then send it to Coinbase Pro. So companies can take what was just cash or gold, sat there doing nothing or losing value, and they can put a small proportion of it to work. And this is why banks like Goldman Sachs and JP Morgan are hiring people with job titles like digital asset managers. So imagine what would happen if every single business in the US put 1% of the spare cash they had into Bitcoin. The price would rocket. But Damien, what if the price crashes?
But in this case, you end up with more coin after that correction. And then you're out loaning it out and you're getting your, and with that volatility, you just got 200 basis points more yield. People don't understand vol is good for yield. It's not good for your stomach, but it actually helps you mine yield from your crypto.
A posh way of saying buy the
fracking
dip. But Damien, what if the price never recovers?
Now, of course, I have to mark to market the change in value because it's going up and down, but I'm kind of agnostic because I'm owning it as property. I don't really care because it's an allocation. Let's say it's 5%. I'm just going to stay at 5. I'll change it every quarter, adding or taking away from it.
I'm not saying these companies should put everything into Bitcoin. We're talking about a 1 to 3% allocation of the spare cash that they have into Bitcoin as a way of combating the inflationary effects of all of the stimulus that's occurred. This is asset allocation as part of diversifying a company's balance sheet, not YOLOing your life savings into SafeMoon.
Hey!
So is Bitcoin dead, and what am I doing?
Bitcoin is going to zero. Zero. When it comes out, zero.
At the end of the day, this is a brand new asset class, and as a result has a lot of volatility and a lot of risk. And in the last few months, the price of Bitcoin has been driven by greed and fear of missing out. Now that the price has collapsed and gone the other way, the same drivers are driving the price into the floor. It's funny how when the price was rising, people were happy to buy it at $30,000. Now it's crashing, people are questioning whether it's dead at $30,000. I think it's very plausible that Bitcoin continues to go lower from here. But when institutional investors decided to enter Bitcoin 12 to 18 months ago, do you think that they didn't know that it was a volatile asset? Do you think that they expected the price just to continue to rise and there wouldn't be these mad swings? I don't think so. I think that they understood that this was a high risk, high volatility asset, and they still got involved anyway.
Bitcoin is very volatile.
I do think that they understand there's a lot of risk here, with the biggest one, in my opinion, being governments trying to stifle it so that it doesn't threaten domestic currencies. This is why they're measured in their exposure and won't be going all in on Bitcoin. And that is the approach I will take. I will dollar cost average about 5% of everything that I invest on a monthly basis into the cryptocurrency projects that I've selected, because I believe blockchain technology in the future will deliver value to the world, and I also think that Bitcoin will be a large part of that. The adoption of cryptocurrency is actually happening at a faster rate than the internet did. And people said the internet was just a fad when that started also.
How does one, what do you write to it like mail?
Now I could be wrong, and if I am, I'm okay with that, because I see Bitcoin and also cryptocurrency as just part of my portfolio, as part of my attempt to diversify across a broad set of asset classes in the hope of building wealth long term. It's just a really high risk proportion of my portfolio, and that's why I only put in 5%. And to most people, 5% is a lot. Most people would look at, say, 1 to 3% of their portfolio into cryptocurrency assets on a monthly basis. So that means if you invest £100 a month, you're only putting 1 to 3 quid of that into cryptocurrency on a monthly basis. It might all go to nothing, and if it does, I'm okay with that. It's not going to burn down the house, it's not going to make me poor. But if it does blow up and go to the moon and change everything, I will also be ready. In terms of the recent crash we have seen, I come from a background of investing in the stock market consistently on a monthly basis and taking opportunities when they come, when the market overreacts and prices drop short term. If Elon's tweet was in the stock market, I would be buying. So why would I apply a different logic to Bitcoin and cryptocurrency? Now it could take years to recover ahead of the next halvening. It might recover tomorrow really quickly, or it might just wither and die. If you're an investor in cryptocurrencies, you need to be prepared and ready for all of those outcomes. And you need to be able to handle short-term volatility. You need to be able to tune out all of the naysayers. People love to hate crypto, so when crypto crashes, people will always stand up and say, see, I told you so. It is the end. Crypto is dead.
Zero.
The question is, will you listen? If you're willing to introduce Bitcoin and cryptocurrency into your portfolio as a long-term investment, then you need to understand it's going to be a bumpy road full of problems. But if you want 99 Bitcoins, then this dip ain't one. Hit me!